Maybe that's better. All right, welcome in. Let me move the. You like the cow? Welcome in, guys. Happy Saturday. Happy Saturday. Welcome in. It's a beautiful Saturday, and today's session we are going to talk about some important things. We are going to make it a very concise session today. I don't want to spend any time on tomfoolery. Right? We're just going to jump right into it. Today's session is a lot to go over, and I like to make it so it's just right to the point. So just bear with me. I am getting stuff ready while I am talking, but I think we're good to go. I think we're ready. I think we're ready. So first of all, I want to say this, for the people who attend live, there are some things I don't record. So I'm most of it's going to be recorded, but there are some pieces that I may not record, just like we did last time as well. So just understand that it's an added bonus for you guys. Some things I don't like to be in the recording, and there's some things are like strategy based or intrinsic to what I do, and it's important that that just stays not recorded, right? And that's just my own prerogative. So for you guys, it'll stay here, but it won't be part of the recording. Just understand that it either will be edited out or it's going to be just we're going to pause the recording. That's one thing that I'm going to do during these sessions in 2026 is I'm going to just show you guys the stuff, but some things I may hold back, not during the live sessions, but I'll hold it back in the recording. The recording will be posted though, right? So most things are going to be recorded. This is not every Saturday, no. I still want to enjoy my life a little bit, right? But we'll be doing at least once a quarter, probably well more, probably a lot more than that. I just don't want to overpromise it, right? So we'll do at least one per quarter, and it's going to be all right to the point stuff, 30-minute sessions, like very quick, right to the point stuff. Things you're not going to find on YouTube, right? Because I don't want to show you guys stuff that you can go on YouTube and find it because that's easy. What's the point of that? There's no value there. I'm going to show you things that nobody's talking about, things that are unique to what I do, and things that I wouldn't normally explain on YouTube. I have stuff on my YouTube channel, I do, right? And there's other people who have other things that are equally valuable in their YouTube channels. These are things I would never show on my YouTube, right? That's just what this is. So there's some things like, why would I give away? If you have something that makes you money every day and it's your part of your living, why would you give it away for free? It makes no sense. And so for you guys, I'll do it. But again, that's why things are not recorded. And that's just how we're going to operate. Okay. So, all right. Today's session, we're going to talk about two important things, completely different from each other, though. They're completely different from each other. In the end, it will all make sense. But today's session, we're going to talk about these two things. Let me just go into slideshow mode. Can you guys see my screen? Can everybody see my screen? Can everybody see my cow? Can you guys see the cow? The cow in the first screen. That's the most important thing. Once we have confirmation. Okay. All right. So cow is there. Cool. All right. So today's session, we're going to talk about we're going to talk about setting the tone for the year. We're going to talk about some boring things first, some presentation stuff. We'll go over some housekeeping items, which is basically how you set up your year. We're going to talk about what you do for 2026, how you approach the year. This is what I did last year. Last year was the first year I had realized seven-figure profit. The year before that, I was multiple six figure, not seven figure. But how do you go from six to seven figure? What is the approach you do? What's my approach now to go to seven to eight? I'm going to explain a little bit about what I did the last few years in a row, which has worked really well for me. And it's not just about day trading, right? This is the thing about today's session. It's usually we talk about just day trading stuff. Today we're talking about things all together, right? We talk about day trade stuff, swing trading stuff, and long-term investing because it's about all three, right? Many people talk about going from 1K to 10K. Yes, I see Hakeem, but the same way you go from 1K to 10K, it's actually very similar going from 10K to 100. It's very similar going from 100K to a million, right? It's the same thing. It's just larger numbers and larger scale. So we'll talk a little bit about these things, and it's important that when you have $1,000 account you have to almost act like you have $1 million account, right? And the way we do that is we think by quarters. So we're going to talk about that momentarily. We're also going to go over our trail stop technique. And the trail stop technique is mostly about day trading, but we're gonna talk a little bit about it in terms of even swing trading and possibly even long-term investing. But just understand that I have a slight bias towards day trading for that second part of the topic. Okay. Besides that, before I jump into everything, do we have any questions? Are there any questions at all in the chat? Type your questions. Any questions at all? Margin account. I do not know what that means, Richard. I do not know what that means. Any questions before I begin? Any arguments here before I jump into it? Any arguments? Nope. Good. Okay, because I wasn't going to read it anyway. I was not going to read it. I was going to pretend to read your questions. I was hoping we get a whole bunch of questions, and I'm going to say no. I was going to answer it, but you know what? No questions at all. So, today's session is. I was not going to answer anybody's questions. I'm just going to be honest with you. I was going to wait for a whole bunch of questions to flood in, and then just skip to the next page. So, we are going to talk about the quarter by quarter theory. All right. This is important. Okay. We have to think about. We have to break our year up into 4 quarters. Obviously, that's what a quarter is. And the way we think about it is like this. Okay. So, quarter one, this is important. Understand we have to go through the boring stuff first, then we'll get to the fun stuff. So, just bear with me for the next 5 minutes. This will be a 35-minute session. We'll be done by 4:40 p.m. We'll be completely done. So, 40 minutes or 33 minutes of this, and you'll be in a good place. So, just listen for that amount of time. Okay. The objective for your quarter one. Quarter one is the first few months of the year. This quarter is about building your cushion for the year. It is about getting small gains and small losses and not ending up in a hole in January. The worst thing you could do is be red during January and February because it makes it incredibly difficult to build out of that hole throughout the rest of the year. If you have a red January and February, it makes it so much more difficult to make money that year because instead of building and scaling properly, you're digging yourself out of a hole and you're probably going to end up oversizing and unfortunately just ending very red for 2026. So the biggest thing you could do during the first quarter is trade on smaller size, but don't be scared to take trades. Your goal here is to test the quality of your setups and not be afraid of setups, but go in with conservative sizing and conservative stops. This means your gun is loaded, right? You're ready to shoot that morning, right? You're ready to shoot that week. But what you're not doing is you're not going in there with a cannonball, right? You're not cannonballing every setup. You're going in there small size, getting the quality to really feel the trade and try to absorb as much time as you can in that setup. That means going in with maybe one half of your normal size. If you're trading on a 10K size in December, well, then your sizing for quarter one is going to be $1,000, $2,000, $3,000, $4,000. This is why for me, this quarter so far, I'll tell you this, my average green day so far for the first few days this year has been about $500, $600. During December, I was making 5 to 10K per day. Right now, I'm making $500 to $1,000 tops. The reason why I'm trading smaller size, but most importantly, I'm focusing on high probability setups. I'm trying to get as much value as I can out of these setups while not oversizing. Because what you're going to notice, and this happens to me all the time, is when I go crazy size on a setup, that is the exact reason that is the exact formula for me to sell that trade early. And I do that way too much. In December, for me, that was a big thing that I did was I had a little bit too much size in December, and I would jump out of the trade too fast, 10% green, 50% green, full sell, right? And the trade would go 100%, 200%, and I'd walk away for a small gain, but it could have been so much more. So January, February is not about, or quarter one in general, is not about not taking trades. It's about focusing on high quality trades and going in with lighter size. It's about capital preservation and consistency. Let the profits accumulate as your buffer throughout the year and avoid over trading, right? So again, for me, that means 2 to 3 trades per day for quarter one. Metrics that matter, win rate matters a lot. You want to be focusing on at least like a 60% win rate for the first month, depending on your strategy. And you need to have a proper drawdown. If your average win is $200, right? If your average win is 200 on your quarter one, your average loss must never extend beyond that $200, right? Again, if you trade any profitable system, your average win must always be larger, at least one, but possibly two or even three are larger than your risk. So if your risk is 200, your average gain must be also 200. We are only a week into 2026. This is the first week into 2026. Go through your last week and find out what is your average win right now. If you find your average win is approximately $100, then you know what I'm going to say. It doesn't take a mathematical genius to say your average loss should never extend beyond $100, 1 to 1 at a bare minimum. If you are losing more than your average gain on your losing trades, you are doing something incorrectly. Now, granted, I'm not saying you don't make mistakes sometimes. I'll give you a prime example. There was a day, I don't know if any of you guys remember this, but back during 2025, we traded a ticker called AVGO. Do you guys remember this one? I was so mad about this trade because for me, do you know how much I lost in this trade? I lost close to 10K in this trade, right? My average gain during 2025, during that month was about 5K. I lost two times my average loss on one trade, right? So again, don't make it seem like, and yes, I did make it back. It's true. I did make it back, but I barely made it back. And that doesn't mean it was a good trade. So let's understand something. Just because I'm preaching something doesn't mean I don't make the same mistakes, right? I also make these mistakes. So when I'm yelling, I'm also yelling at myself as well, right? So keep that in mind. You must not make your average win must at always be larger than, or at least 1 to 1, but usually should be larger than your average loss. Okay. And your quarter one profits basically are what give you cushion throughout the rest of the year. During quarter two is about developing size. Okay. This means you're working with controlled aggression. This means you're increasing size, but not the frequency of your trades. Remember, this is important. I'm not talking about reducing the amount of trades you take during quarter one or quarter two. In fact, during quarter two, you begin to develop more size in your trades, but the frequency stays the same. You focus on A plus setups only, the setups that work best for you, and you also use your quarter one cushion to tolerate normal variance. Again, this is important. There's going to be normal variance, right? That means that even right now, if you're red to start off quarter one, it's not a bad thing. It just means it's probably normal variance, right? There could next week, in 2 weeks, you could be back green again, but understand that you now have your Q1 cushion to tolerate this variance going into your next quarter. Refine strategies that performed well during quarter one. So you may find things that worked really well. For example, for me during 2025, a big system that worked really well was the break and retest. Continuation strategies were incredibly powerful during our quarter one, our 2025 year. And so during quarter one and quarter two, I realized that was my main focus. And that's all I focused on. Almost entirely what I focused on during 2025 throughout Q3, even through Q4, was continuation trades. It was 90% of the trades I had taken were continuation trades. Now, during 2026, we may find that it's completely different. We may find that uh, during the first quarter, that reversion trades are better right now. Downside trades are better right now. In fact, you're seeing a little bit about that sort of even yesterday's session or even on Friday's session, Thursday's session, right? You saw that those continuation trades, the upside are good, but if you want to short, you should be looking for continuation short downside moves, right? So kind of we're going for those reversion trades. They don't really work that well during an upside grind market. So we'll see how this works. But again, we're still forming those ideas for Q1, which will then tell us what to do in Q2. What you want to do here as well is you want to be focused on increasing your size here, but not going too crazy in terms of your quantity of trades. Okay. The third quarter is about optimizing and defending. Okay. What this means is it's basically the same thing as Q2, right? Fancier words here. It's the same thing as Q2. What you're doing here is you are keeping the size the same. You're pushing, you are pushing, you are pushing, and all you're doing is waiting for Q4. Quarter four is the year, is the quarter. Everyone says this. They say preserve capital during quarter four, preserve capital during quarter four. I don't know if you guys have felt differently about this, but for me, what's going on here? Everyone says preserve capital in quarter four. Uh, Quarter four is all about just keeping your gains through the year, right? Yada yada yada. I think that's BS. Everything over here for me is BS. Okay. For me, quarter four is the biggest part of my year. Quarter four is where I get those continuation trades. They work so incredibly well. Think about during even before Christmas, right? Before Christmas, every single trade we were taking was going 30, 40, 50%. these are the times where people say you shouldn't be trading. Guys, I can't move my head. I don't think my head can move. You guys can move it yourself, I think. There's a on the Zoom, you guys have to, there's like a way to move it. You got to move it yourself. I don't think you can, there's no way for me to do it. I think it has to be, yeah, you can minimize the box yourself. So just minimize it entirely, right? But for quarter four, they tell you not to oversize, right? To size down. I disagree with this, right? For me, quarter four is again, it's about maybe reducing size ever so slightly, but keep pushing because this is when those continuation trades work really well. They say a great year can be rooted in Q4. Pros don't let this happen. Yes, it's true, right? But as long as you're trading with trend in quarter four, it tends to work really well, right? Liquidity tends to dry out towards the end of the year, so you get a lot of trend-based days. So quarter four for retail traders can actually be really good, right? So just focus on keeping your risk tight. And again, the common theme you're seeing across the board is for quarter one, it's about taking lighter size, high quality trades, keeping the number of trades the same. Quarter two and quarter three are the same. Basically, what this means is you are developing more size and keeping the trades at the same rate. And then quarter four, everyone says size down. I don't think you really should size down too much. I think if you're doing all right, you can keep your size the same. But most people, most professional traders would tell you you should size down. I am disagreeing with this, right? This to me is not so important. But the most important thing though is focus on continuation trades during quarter four because that's when volatility is the highest and you have low volume days. Low volume days plus high volatility equals trend. So if you trade a break and retest or an orb strategy, whatever it is, in most times it's going to perform pretty well in quarter four. Again, though, the theme across all quarters is you are slowly building cushion up throughout the year. And then once you are past quarter two, you are at autopilot. You have the cushion built up now, and you can put on more size. Okay. So let's move on. What I want to do now is I want to try doing something fancy here. I'm going to go over to my iPad. I'm going to use a share screen thing here. Let me see. I'm going to try sharing a screen on my iPad. And if this works, we're going to be really good. So guys, for quarter three is the same thing as quarter two, right? Quarter three is the same thing as quarter two. There's nothing really here. This is quarter two and quarter three are the same for me. It's all the same. The difference really is quarter one and quarter four, right? Where things are accelerating and where things are deaccelerating, right? That's the difference. Quarter one and quarter four. Quarter one is the most important part of the year. It is building your cushion. Quarter four is a cherry on top. Okay. So I'll leave it to quarter three just so you can read it while I am sharing screen on my other device here. So what I want to do is I think I need to stop sharing here on, oh wait, you know what? I need to make this one co-host. Okay. So also we're recording right now too, right? Are we recording? Yeah, we're recording. Good. Or we are recording. So bear with me, guys. I'm trying to figure out how I can, you know what I need to do? I think I need to stop sharing screen here. And if I stop sharing screen here, then I should be able to share screen on my other device. Oh yeah, we are in business. Look at this. Three, two, one, bam. Look at that. Okay, so I am testing something right now to see how this works. So bear with me. This is the first time I've ever done this before, using using my iPad on the screen. So let's try and see how this works right now. But you can see my account. No, you can't see my account. I don't have anything open. You guys are trolling me. You guys are trolling me. That's crazy. Okay, so what I want to do right now is I want to show you some important things here for a second. So I'm moving away from the presentations because the presentations get really boring. I want to talk about some important things. As a trader, as a trader, there are a few systems we all learn. Okay, the first thing that we all do when we start is you you do a little bit of this, right? So let's draw a box over here, right? You know what? Let's make it a bigger box. Let's make this a bigger box. You know what? It's fine. We do this just like this. Okay, zoom in here. So the first thing we do is we day trade, right? So I'm going to put DT for day trading. And this is a core component of what we do, right? We're day traders. And then we also learn to perhaps swing trade, right? We do some swing trading. So I'll do ST for swing trading. And then the last thing we do is we do a little bit of long-term investing, right? Long-term investing, LTI. I so often see people all the time in the chat and outside the chat. What they'll do is they'll do this. They will focus on one particular thing and not do the other two. And so what happens is you have to realize that we talk about these quarter systems, right? About scaling up and yada 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 and BS, right? That's all good. Okay, this is all good stuff, and we all know this as day traders, as swing traders, as long-term investors. But it's important that you also know what to be doing and when. So, for example, during the first quarter of the year, in my opinion, everybody should at least be aware of what's happening in the market, right? It doesn't mean you'd be day trading every single day, but you should be trickling into a little bit of the day trading market right now, right? There should be some involvement in a day trading market and some involvement in your swing trading market, right? A little bit of intraday stuff, a little bit of 2 week out, 3 week out, 4 week out expiration options. That's totally fine. But when the market sells off, and the market is going to sell off this year a little bit, you're going to see probably a little bit of that towards our quarter two. You need to start being involved in your long-term investing because so often what happens is we focus on one system, i.e., day trading, and we do nothing else besides day trading. I have never met a single trader who is 7 or 8 figures who is just a day trader, who is just a swing trader, right? Yeah, you get some people that are just long-term investors. That's also true, right? So you do get some people. The only one system I see some people do, and they are just 7, 8 figure rich or 9 figure rich. They're just long-term investors. Sure, right? That's fine. You see it often, but you never see a day trader who just day trades. You never see a swing trader who just swing trades. So why are you anything different? Why are you pretending to do anything different, right? And so the idea, and I'm trying to explain here, is even though we know how to be working throughout each quarter, right? We size down during quarter one, we size up during quarter two and quarter three, autopilot, and then quarter four, we're building a little bit of size and looking for continuation trades. That's good. But what we need to be doing throughout the whole time is doing a little bit of all three and knowing when to do it. Right now, day trading should be your top thing. Day trading and swing trading should be your top thing. Long-term investing is not great right now at an all-time high market. This is something that people don't understand, right? The market right now, when SPY is at all-time highs, how are we buying a lot of names for long-term investing? It's very difficult to do that. Most of what we're doing now is managing long-term positions. Now, there are some things you could buy here long-term. For example, you could buy maybe Netflix, like NFLX. You could buy healthcare names like UNH, right? Maybe UNH is a healthcare name you can buy now. Maybe some other names you can buy. But for the most part, the market's at all-time highs. So how are you being a long-term investor? There's going to be a point where eventually the market does sell off, right? The market sells off aggressively. The market's selling off like this, right? And you're day trading, day trading, day trading. But then all of a sudden, the long-term market is going to be what you should be focusing on the most. During quarter four, that was when you had to sort of rebalance your portfolio. Now during quarter one, people are in autopilot again and are starting to rebalance things. And there is values in some sectors. There are value in some sectors. For example, there's value in healthcare. There's value in bank names. There's value in retail names, Target, TGT. There's value there. But again, our main focus right now is not here during our quarter one. During quarter two and quarter three, you may see us begin to refocus into long-term investing. So why am I showing you this? I'm showing you this because I want you to understand what sector of the market, i.e., one, two, and three, is hot. Right now, the sectors that are hot are one and two, not three, right? Again, there will be a point in time when the market sees a broad-based sell. When the market sees a broad-based sell, I want you to refocus and go back into long-term investing. And the one thing I don't want to hear, this is the most common thing you hear, is Brett, I only have $3,000. Brett, I only have $5,000. Brett, I only have $1,000. How can I be long-term investing? You can long-term invest. You can invest with even $100. What you should be doing is if you have a $10,000 account, right over here, what you should do with that is put $2,000 into day trading, $2,000 into swing trading, And the remaining $4,000, right, or $6,000 rather, $6,000, the 6K goes into long-term investing. And so when it's waiting to be invested long term, what do you do? What you do is you buy undervalued names right now. For example, you could buy retail names, right? You could buy healthcare names, but the majority of the $6,000 is probably going to remain uninvested. So if you have $6,000, of that $6,000, Brett's saying it's not a long-term environment to be investing in long term. So what you do is you probably put only $2,000 into stocks. I.e., what you do is you maybe split some, maybe some into XLF, you invest some into VOO, you invest some into NFLX, right? Netflix, some into TGT, right? Maybe buy some Costco, COST. Costco is a great retail name. And the other $4,000, what does it do? The other $4,000 sits in a bond, it sits in a high yield savings account, right? It sits in something that's giving you interest rate beyond 4%. Your goal is never for it to sit below the current inflation rate in the market, right? So 4% is the bare minimum I'd be looking for right now. Anything sub 4% is not good, right? You can be in treasury bonds, you can be in municipal bonds, but the goal is to have this invested somewhere. And you may think $6,000, that's not that much for long term. It is enough, right? And don't let anybody tell you otherwise. Even if this number was divided by 10, let's just say this was $1,000, right? $1,000 you're investing here. It's the same thing. You divide everything by 10. You'd have 200 here, you'd have 200 there, and you'd have 600 here. It's the same thing. The numbers are just reduced by 10. And if you are investing $1 million, right? I do the same exact thing. Everything that I say, everything that I practice, that I preach is also what I practice. For me right now, my entire portfolio, my long-term investing portfolio is about 80% invested, which is probably too much invested at this given moment. But what I'll do in this portfolio is I will invest majority into undervalued names, which is retail, which is healthcare, which are banks, right? Those are the names that are undervalued at this moment. And again, what we're doing is I will begin to get out of my long-term investments this quarter and then look to rebuy during quarter two and quarter three, which is probably what's going to happen right now. I think it is what's going to happen during this year. So again, this is important. I want you to think how a real trader thinks. A real trader doesn't just look at day trades. A real trader doesn't just look at swing trades. A real trader doesn't just look at long-term investing. A real trader understands where the value is right now. And the value right now is mostly here and mostly here. At some point, we're going to see a shift to long-term investing. We're going to see broad-based selling in the market. When that happens, you should be excited. You should be waiting for it, right? But it doesn't mean you sit there like a pansy with your $6,000 sitting in cash. It means 2,000 goes into stock right now at this exact moment, and the other 4,000 or whatever remaining amount you want to be sitting there is invested in bonds or high yield savings or something giving you 4% because it should be at least getting you something. Don't be a pansy, don't be sitting there with nothing, but at least have partial investment and the rest in an HYSA, which is a high yield savings account, right? Or some sort of bond. Okay. If you guys want examples of what bonds to be invested in, go into the questions channel, ask one of the mods, ping me. I'll tell you what you can buy. Okay. But again, this is my approach to this year. Right now, focusing on this and this, and that's it. Okay. So what I want to do is I want to take over the screen. I want to replace current share and I want to jump back into my other screen here. Let's go into my this screen. Okay, so we're back here now. I'm going to close out of this because we don't need that anymore. And I'm getting out of here. So guys, when it comes to leaps are also long term. When I say long-term investing, I also mean leaps, right? Leaps and long-term investing are the same thing, right? Shares and leaps are the same thing. The one thing I'll say is if you have enough capital, it becomes better it becomes better to shift over to equity, right? Think of it like this. Ask yourself this. How many hedge funds do you know? And by the way, you can Google this, right? So you don't have to know the number off your head. But how many hedge funds do you know are investing long only in options, right? you're going to find very quickly that it's not many, right? Most hedge funds use options for hedge strategies, not for building positions. Most hedge funds, most larger hedge funds, what they'll do is they'll trade larger size shares. When it comes to us, right, we do a lot of options because options are derivatives. Options allow you to make a lot of money off of a little investment. But at some point, you should shift over to mostly equity, mostly share trades. Why? Because you can control your size better and you don't have to worry about theta decay. Okay. So let's move on here. I want to jump into trail stops. So we are completely switching away from this topic number one. That was important. We are now shifting into topic number two, which is going to be about trail stops. Now, trail stops is a really important topic because trail stops is not just for day trades. It is also for long-term investing. It is also for even swing trading. What I want to do is I want to shift over to TradingView so we can go over some examples here. So if you guys remember last class, the last class that we did, we spoke about entries. We spoke about how you scale into trades. Today's session, we're going to talk about how you scale out of trades. So what I'm going to do is I'm going to go over an example from the trade that we had taken on Tuesday's session. Now, I actually had taken two trades on Tuesday. The only trade I had actually signaled was a short in the market. And the short in the market was when SPY had approached a key level here at around the midday. It was around 10:20 in the morning. We had looked for a put entry here. And what I want to do is I want to show you something. I want to show you this chart right here. So right here in about one candle, you see it, one candle right here. After this candle printed red, right over here, you're going to see this is when we went short the market, right? So we went short the market right over here. So once you go short on a trade or you go long on a trade, you now open a position here. How do you know where the stock is going to go, right? How do you know what your target is? Is the stock going to go here? 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 I'll be the best answer to this is you just don't know, right? Nobody knows how far it's going to go. You can come up with some ideal goals of how far you think it's going to go, but the reality is nobody knows how far it's going to actually go. It may go one R, one risk, and jump over here and do this, bam, and stop you out. It may go over here and work for you and goes all the way to zero. Nobody knows how far it's going to go. Anybody who tells you otherwise is wrong, has no idea what they're talking about, and you shouldn't be listening to them, right? As a trader, the only thing we can really control are two things: your entry, your entry, entry, and stop loss, right? Everything else in the trade is out of your control, right? You don't know how far it's going to go. I know my entry is right here, okay? My stop loss is right there. That's this, okay? But in this case, my take profit could be really anything. It could be here, it could be here, it could be there, it could be here, it could be at 686. I don't know how far it's going to go. So instead of guessing how far it's going to go, what we're going to do is we're going to put basic targets out there. The first target we're going to have for any trade is your one risk. So what is your one risk? Your one risk is how much you are risking on that long or on that short. So if you were getting in the trade over here at 690.6 and your risk was 691.2, then your one reward, right? Your one risk is 56 cents. Your one reward must be an equal magnitude to that one risk, which in this case would be 690.1, right? 690.05. That would be your first take profit here. Once you've taken your first take profit in this trade, we then initiate what is called initiate trail stop technique. Okay. But again, every trade that I take, whether it's a long-term trade, whether it's a swing trade, whether it's a day trade, I always take a little bit of profit at my one reward, at my one risk. So my one risk is, let's just say this much, right? If my risk is $2.84, then I can't take profit on this in theory until 687.70, right? And obviously I would never take a trade like this unless it was a swing trade. But the most important thing is if my risk is this much, my reward must be one magnitude of that risk. This is an important thought. Okay. Now, once you've gotten your first R on that trade, your first risk, meaning you've taken some profit into whatever your risk is, which was in this case here. Okay. So you take profit there. How do you now know where to sell the trade? Well, at that point, we don't know. And instead, what we do is we revert to two things. We revert to either a structure strategy, or we revert to an EMA strategy. And to put it very simply, if I'm trading a reversion strategy, which means I'm trading a strategy that is buying puts at resistance or buying calls at support, that means that I'm trading some sort of reversion strategy, right? If a stock is going up on the 5 minute chart and I'm buying puts, that's a reversion strategy. If I'm buying calls on a downward trending market, that means I'm buying a reversion strategy. So any reversion strategy means I'm using structure. And what is structure? Structure for me is going to be the previous 5 minute candle high or low. So watch this. When I see the trade begin to work for me here and sell off right here, my stop loss now on this trade is going to very simply be the high of this candle, right? That's what it means. It means I am literally just using the previous 5 minute candle high as my stop loss. And that's just what it is. And so every time it continues pushing lower, and as long as we stay beneath my previous red candle, which in this case is here now, I am now following that as my trail stop. And every new candle that forms, I am just going back and seeing, are we beneath the previous candle high or the candle low? In this case, we are, until eventually right over here. We're back at support again. But even so, is it going to break here? Is SPY going to break 688.50 and absolutely dump? The answer is we don't know, right? We don't know if it's going to break. And so what I would do is, again, have my stop loss right over here, and that's all I'm going to do. And as soon as we break above it, which in this case you can see, next candle comes in, starts to form a base here, and then watch this right over here. This is where I would be out of the trade right here, right? I would be fully out of this trade and I'd walk away. Why? Because again, we broke above the previous candle high. It's a structure strategy. When you are trading reversion strategies, you must use structure as a effective trail stop. When you are trading a trend-based entry, so watch this now. We had gone short here in the chat at Tuesday, the 6th of January at 10:25 a.m. At approximately 11 o'clock, we had closed out live trading. And I took this trade on my own here. And it wasn't a particularly good trade for me because I ended up getting out a little bit early in this trade, to be honest with you. But you're going to see here, I then saw us developing a trend entry here at support at the pre-market level, at the breakout level of the session. And we were starting to form a potential uptrend again, in which case we could see move higher. This is a different this would be a different trail stop strategy. And so what do I mean here? If I'm entering long right now, let's just say I enter long on this candle right here. Let's just say I see it's beginning to form a base here. And so what I do is I say, you know what? I'm gonna long SPY right now. So I long SPY right now because we're basing at support, a break and retest long entry. So I long SPY with a stop below 688.75. And and actually that's the wrong way. We are looking at a short here. Let's do a long. And in this case, I do a stop below 688.75. Well, my take profit, if I'm entering right here, means my take profit must be at least one magnitude of risk, which is 0.45. So my first target in this trade, at a bare minimum, I must get to here, right? At a bare minimum, I must get to here. And this may be 10% on one days, it may be 20% on 0 days, it may be 40% on SPYG, right? But again, the biggest thing is no matter what, you are taking at least a little bit off of your above your one risk. And it doesn't mean I sell here. I will never sell right there. I look for the first break above that 1R. Once you break above it, I get some sells off and then quickly adjust my stop loss to break even, right? To my entry point. And then once I've done that, I initiate again my trail stop technique. And what is my trail stop technique for continuation trades? Your continuation trail stop technique, which would be, for example, a break and retest, right? A break and retest, or an orb strategy, or um, anything that has a breakout where you are buying into a green candle, right? Or buying into a continuation candle. That is a continuation trade. On these continuation trades, all I'm doing is I'm using EMAs. I turn on my EMAs here. And what this means for me is I am literally just going to use my 8 EMA. So at this point, as long as we are above the 8 EMA, I would hold the trade. When my clouds are green, I'm holding as long as we're above the 8 EMA. So right now there's still red here. Give it one more candle. You see right here, it comes in, starts to turn green here, right there. Now, as long as we're above the 8 EMA, I'm holding longs. And so watch, you see this little inner line here, the inner line here in SPY. That inner line on SPY is my stop loss. Why is it my stop loss? Because it's just the EMA on a continuation trade. This is the thing. On these type of trades, nobody knows how far it's going to go. You can come up with ideas of where you think it's going to go. Idealize, take profits, but it may break right through it, right? Or what may happen is you may say my take profit, my T1 is right over here at highs. And then what might happen is it goes all the way to T1. And then you know what happens? This happens, right? And you sit there wondering what just happened. Why did it not go to your T1? Because nobody cares about your T1. The market doesn't give a shit about your take profit, right? The market just cares about levels, it cares about structure, and it cares about trend. And so when you're taking trades and you come up with these ideal take profits and you're holding to it, screw your take profit. Nobody cares about your take profit. Use EMAs to stay in trades on continuation trades. That's the simplest way. Now, how do you know which EMA to use? I just said the 8 EMA. It doesn't mean you have to follow me to a T. It doesn't mean you just say, oh, this is the only system to follow. No, you may find that on certain tickers that the 13 EMA works better. For example, there may be some tickers that require you to use the 13 EMA. For example, if you're trading Costco, COST, right? COST moves not as aggressively as SPY. So if you tried to use the 8 EMA here, you would just get stopped out all the time. And so that is why you must adjust the EMA you use based upon the ticker you're trading. A prime example will be Tesla, right? Once Tesla enters trend, it tends to be very aggressive. The 8 EMA is very effective on Tesla. It is an extremely effective trail stop strategy. You can see here, as long as the 8 EMA holds, the trend maintains. When the 8 EMA breaks, the trend kind of falters and fizzles out, right? Where it doesn't do anything. Again, the ticker you're trading requires different EMAs. That is why I only trade about 10 tickers, because for me, I know which trail stop approach I'm using on the ticker I'm trading. I.e., Apple, I would probably give up to the 13 EMA on Apple, whereas on a stock like Tesla, it would be the 8 EMA, sometimes even the 5 EMA on a very trending day. SoFi, SOFI. Look at SoFi, the 5 EMA, right? SoFi is an extremely a trending name. You don't need the 13 EMA on SoFi. It makes no sense to give it to that point. On a very trending aggressive day, using the 5 EMA is a very effective approach. Again, be dynamic with the stop that you choose, but stick to it once you've chosen it. It's very important. You don't just go, oh, SoFi, I'm going to trade the 13 EMA one day, and then the next day you're trading the 8 EMA, right? Again, stick to one approach and follow through, right? Have consistency with the trail stop that you pick. But again, the most important thing is you are using some form of trail stop on every trade you take. I'm going to give you an example. Let's go back to the trade that I had taken on Friday session. So Friday session, I shorted SPY right here. On this red candle, I went short SPY. I shorted SPY at this exact moment. Ask yourself right now in the chat, is this a reversion strategy or a continuation strategy? If I went short right now at 11:15 a.m. Eastern Standard Time, is this reversion or continuation? Reversion. Okay. Reversion. Good. So because it's reversion strategy, I know that what I'm doing is I am looking to see if I can use a structure as a trail stop. So I'm not using EMAs here. Why can't I use an EMA here? Because look at what the EMAs are saying. The EMAs are green. I can't be buying puts and then using a green EMA or a green cloud to keep me in the trade because technically this would keep me out of the trade, right? This makes no sense. So you don't use EMAs on reversion trades, right? Just giving you a little bit of an example here, right? But what I would do here is I would look for a short, right? And I would use structure as a trail stop. So if you guys recall properly, I actually didn't short right here. I shorted a little bit lower. So I shorted on 693.30. So right over here is where I actually went short. Like right over there is where I actually got filled on puts. So right there. So as soon as we printed down lower, big candle comes in, Bam. I'm already in short. And at this moment, what I'm going to do is I'm going to enter the trade right around over here. And I'm going to now identify a short position here with a stop loss above my wick high here, 693.50. And my take profit, in theory, my take profit on this trade can be as small as my risk, which is only 25 cents, right? My take profit could literally be right here at 693. Why? Because I'm only risking 25 cents. It doesn't mean I'm going to go and take all my profit off, but it does mean I'm taking a little bit off here, right? And so if I came in here with 30 contracts, right, I would probably sell probably 15 to 16 contracts right over here into first risk, right? And so watch what happens here. Big candle goes down, right? Right into take profit one, bam, right? I take some profit off. I'm a happy camper, right? I make some money. And then now what do? My stop loss very simply gets adjusted to the structure, which in this case is this candle high right there, right? So my new stop loss is right there. And how far is this going to go? It could be all the way down over here, right? This chart could have very easily gone all the way to 691 this session, right? It could have very easily gone from here all the way down over here. But again, nobody knows how far it's going to go. All you can do is you can control what? You control your stop loss and your entry. You control nothing else besides those two components of the trade. My stop loss has moved almost every single candle, Noel. Yes, almost every single candle, my stop loss is moved. Okay, and so once you start printing down lower, I take some profit here, right? But again, my stop loss is now going to be here, right? It's where that little line is. And then watch what happens next candle, right? Next candle comes in, it sells off for a second. I get some more money, right? And I take some more profit off, right? Get a little bit in the green here. Now at this point, I'm probably up 15, 16% in this trade, right? I'm up 85 cents since entry. So this is a nice trade so far. But then watch what happens. I take my stop loss, I adjust it again, right? My stop loss is now going to be over here. This is my new stop loss. Again, the previous candle high or the structure. Now watch what happens. We reclaim it, right? Next candle comes in, big candle. I'm still holding, right? I'm still maintaining. Oh shit, I'm out. This is the candle that says, you know what? The reversion trade is just not going to work, right? You get out of the trade, you walk away for a small green, and you are done with it, right? So instead, tell us why you got in the trade. What did you see? This is not about that, right? We're not talking about entries. We're just talking about our exit strategy, right? That's the purpose of today's session, is talking about what our trail stop is. This is not strategy based. This is just trend and structure. Very important, right? And not just the bearish pin bar, right? There are other reasons to trade. But again, the point that I'm trying to show you is what makes what makes this what makes this chart, what makes this trade right here, what makes this trade right over here, the short that we had taken right over here, what makes this trade any different from the trade that happened on this session over here? What makes it any different? Why did this trade work out so nicely and then this trade not work out as nicely? Why did this one not work out as nicely? The answer is there's no difference, right? There is no difference. Don't let anybody tell you that. There is no difference. The trades were the same quality, the same structure, the same tap, even the same intraday candles. Look at that, almost the same exact pattern right at supply. This chart could have very easily sold off here. But again, we didn't know that was going to happen. So we trailed it effectively. And that's what we did. Every trade, we combat it the same exact way every single time. And the answer is, how far do you think a stock is going to go? You never know the answer. All you know is you know trend and you know EMAs. And you're gonna keep taking profit into every move down lower and raise your stops constantly. This trade could have gone multiple 100%, but it didn't. It went 15% and stopped you out. That's how some trades are going to be. Okay. So to recap this, what did we learn from today? We first started talking about some important stuff about quarters. We talked about our quarter system. We talked about scaling down during quarter one, but then ultimately scaling up during quarter two and quarter three. And then quarter four is about capital preservation. We talked about day trading. We talked about long-term investing. We talked about swing trading. And we spoke about the ideas that some of these things are hot while others are not so hot. Right now, day trading and swing trading should be focused. Long-term investing, we can't forget about it though, right? We are dabbling in it a little bit right now, but we're going to get full force when the market starts selling off. When the market starts selling off, we are focusing primarily on long-term investing, primarily on building strong portfolios for another push in all-time highs. It's very important that we do that. We know what system and strategy to focus on as the market is doing whatever it's doing, which right now it's at all-time highs, right? Market's at all-time highs. So what are we doing? We're day trading, we're swing trading, we're doing shorter term positions, right? But in no world are we going full port into all of our brokerages, right? Because again, how could you be buying? It's very difficult to be full port Nvidia at this price. Okay, so the last thing we learned was we learned about trail stops. We spoke about using structure and EMAs as an effective trail stop strategy. So that is it for me today. What I want to do is I want to answer a few questions. So we'll give it to we'll give it 5 minutes. So answer or ask your questions, ask good questions, and if someone posts a billion times one question, I will literally not answer that question. So that's the one question I'm not going to answer. That's the one question I'm not going to answer. That one question someone's typing 100 times is the one question I'm literally not going to answer. I didn't need to do that, right? Okay. Yep. That's crazy. Once he's done with it, now I'll answer. Okay, now I'm going to answer it. Okay, now we're good. Kevin, so I'll answer your question. Can you do a class on levels and plotting and being confident in levels? Yes, I can do that. Yes, I'll do that. I can do that probably next month, maybe in February. I'll do one. What should we do in the military if not able to day trade? Then swing trade and long-term invest. Do both, right? You should be swing trading and long-term investing. That's fine, right? But you have to do two. Can you show us your cloud setup? Yes, this is my cloud setup. So go over here. I use these clouds here. And if you go to indicator, HTT clouds, it's this one right here. So it's this indicator right here. This is the one. So this is the indicator that I use. It's the same thing as Ripster clouds. It's the same thing as I forget what other clouds there are, but Ripster clouds is pretty good too. Okay. Uh, that's all it is. Why the 5 minute chart and not the 1 minute chart? Lynette, that's the only chart I use. I tend to like the 5 minute chart. For me, it works pretty nicely. When do you take profits from long term? James, it's a difficult question. To be honest with you, you should there are some companies you own forever, right? Like I have some stocks that I own forever, like Apple. I will own Apple forever. I probably will never sell Apple. I just will always own this, right? But if I'm ever oversized Apple, which right now I'm probably heavier in Apple than I should be, right? Because right now, normally on Apple, I would have like a 10, 20K position. But if I'm in Apple shares on a position trade, I'm probably very sized up a lot, right? And so for that reason, I would take sells into technical levels on this chart, not just because I want to hold it long term. So to answer your question, some trades you hold forever, like some long-term trades you just never sell. But if you're ever oversized, that's when you begin to take profit, right? And as the stock moves in your favor, eventually there will become points where you just are simply oversized. For example, during 2025, 2024, I was in Nvidia and I was in Nvidia at 130 a share. People said, don't buy Nvidia at 130 a share. I was buying Nvidia at 130 a share. And I was in it pretty heavy size. And I thought I would hold Nvidia forever. And then it went from 130 all the way to 190. At that point, I realized I have to sell some Nvidia because I'm just oversized on it, right? I didn't sell all of it, but I sold some of it. So to answer your question, it's to sell when you're oversized in a trade and sell when you no longer believe in the longevity of that company. BULL. I was in Bull stock. I bought BULL with an average price of getting a phone call. I got BULL at an average price of $8 a share. It went to $12 a share, and I sold everything around $12, $13 a share. The reason why is because I no longer believed in the company long term, right? And I got rid of it. So there are sometimes you sell for you being oversized. There's sometimes you sell because you don't believe in the company, and there's sometimes you sell because you just want to get out because you have too much exposure, right? What do you think about the strat? I don't know much about the strat, but if it works, it works. What do I use to back test? I journal. I just journal everything. Can you go over swing strategies? I will. I can do that at some point. I could do a different class on that. What do you think about SMCI for swing? SMCI, yeah. I mean, look, if you look at SMCI right now and you believe in I don't know much about the fundamentals here in SMCI, right? So you'd have to dig deeper into financials here. But if you believe that this is I mean this is this is sold off a lot, right? This is sold off a lot from highs. So I mean, if you want to start dabbling into shares, this is when you do it. Again, I don't know. For me, on companies like this, I would look to see first, are they financially sound? And if they are financially sound, then I look for a technical entry, right? You have to do it like this. Don't long-term approach, right? Never just look at the chart. The stock is down and is selling for a good reason. Okay. First, how are the company's financials, right? If they are sound, right, and you believe long-term growth, right, then look into technicals, right? Technicals. Not every oversold stock goes back up. This is really important. Let's get that out of our heads. Not every oversold stock goes back up. You have to approach it this way. First, they are a good, technically strong company from financial perspective, right? Meaning they have positive free cash flow, right? Free cash flow, positive free cash flow, positive FCF. If they have positive FCF and they are they are a good product, which for me is important, it has to be a good product that I believe in, then I look for a technical entry, right? Technicals tell you when to enter the trade. The financials and fundamentals tell you whether or not you should be even watching that trade. For example, if you were to look at a stock like Procter and Gamble, right? Procter and Gamble is a stock that everyone said to buy, right? Procter and Gamble has technically sold off, right? A lot. But is it a buy here? It's not a buy unless you know the financials. Will be a better example, right? Xerox, right? Xerox stock. Xerox stock got absolutely murdered. Why? Because it was not a good product, right? It was not a good product, and unfortunately, it lost its market share. Okay, not every oversold company gets bought back up. You have to remove that from your head. SMCI I believe, is a good company, but you have to look into it and see under the hood and see if it actually is a a strong company with positive financials. Okay, OKLO, right? OKLO actually is a good company. So this one I know is a good company. So if you want to buy OKLO on a dip, then that would be a good example. Yeah, BYND. That's a good example, right? BYND, an example of a dip that never gets bought back up. Why? Because it's a shit stock, right? It's just a bad company. Okay, not every oversold name gets bought up. Okay, we'll do one last question, guys. One last question. Can you do a class on execution while trading? I can probably do that in the future. EMAs for day trades, EJ. EMAs. I use exponential moving averages. TTD, I think Aristotle's TTD. I don't know much about the stock, but I'm sure he's done a lot of research here. TTD looks like an interesting one. I don't have a position here in TTD, but I know that he's in this, so I'm sure he's looked into it. But I mean, from a tactical standpoint, it's I mean it's at demand here. I mean, technically just broke demand to be honest. Look at this, it's breaking demand here. It has to reclaim 39, 40, right? 40 is the level it has to reclaim. 40 flat. You can see very clear inflection point. Very clear level. Okay. Guys, thank you all for joining in. If this was helpful, let me know. I will see you guys all on Monday. Have a happy and safe trading session. Look, I know this session was a lot of content. It was a lot of things that were kind of disconnected, but it was important to do this. It was important to do this in January because oftentimes we forget, right? We forget what's important, and I wanted everyone to stay grounded and ready for the year ahead. Okay. Enjoy your weekends. It's Saturday, so it's beautiful. You can enjoy your Sunday. I'll see you all on Monday. Have a nice weekend. Bye, guys.